Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, January 26th. Today's FOMC day. Splashed all over here. We do have news on crude inventories, excuse me, at 10:30 this morning, but we do have our FOMC statement, our federal funds rate, and our FOMC press conference shortly after the announcement. Now, most people in Wall Street are expecting an increase in the federal funds rate. Hence, that's why we've been having the type of activity in the market, excuse me, that we have been seeing recently as we start our analysis with our daily chart. And as you can see, the market has been pretty active lately, to say the least. We're averaging over 1.8 million contracts. Our ATR is way over 90. Another a lot of volatility, of a lot of movement. And again, we're right below the 200 SMA. And remember, I called this earlier this week, and we also talked about potentially this level here being the next line of defense in reference to support. Obviously, the market did penetrate it by 30 or 40 points, but it quickly recovered, and it took this incredible 300 point range bar and ended up closing to the upside below the SMA, 200 SMA. And of course, yesterday we had the inside there. Again, we had the big drop to the previous resist support level, but it bounced right back. And today, of course, we're taking off like a bat out of hell, heading right again into the strong resistance of 200 SMA. Pretty decent volume thus far. Why is this happening? Again, this is just the market absorbing the potential news of what's going to happen with federal funds rate. Is going to be a quarter of a point. This is going to be half a point. 3/4 is going to be a full point. So that's what's happening in the market. And of course, the jitters with what's happening at the Crimean border with potential Russian troops escalation, and of course, inflation, rampant crime, and we could just go down the list. And that's exactly what's happening in the market right now. But investors are always looking for bargains at these levels. Remember, this particular drop here in October, market rallied to all-time highs, eventually retracements to the new all-time highs beginning the new year, the big correction, and then here's where we find ourselves right now. What are we looking at the market reference to today to put more perspective on this? And this is what's key. You have to understand what's happening at various time frames in order to develop your expectations. So we have a higher level support, a resistance trend line to the downside. That's kind of now adding compression to the market. As you can see, we have this particular trend line here. We broke through this one. Market is currently, this can actually go away now. What we have here is a clear compression. Which way is the market going to go? And of course, it can break it either way. If the market holds support here, it can continue higher. If the market does not hold support, it does have previous areas of support to run down to. Now, it all depends on what's going to happen at the FOMC day. This morning can go one of two ways. The market goes slowly, sideways, very little activity. It can pick up speed in one direction or the other just before the news, sort of establish positions. Or it can go just be a normal day. But we know that just before the 2 o'clock news, market's going to slow down, waiting for the impact of the announcement, and eventually you're going to start seeing the market move real heavy during the afternoon. So that's what the market has been waiting for. So this is why we're having this type of activity. So that's where we are finding ourselves right now. It looks like most of the strength looks like it's going to the upside at this moment, but we'll see if that's just a temporary hold or is it going to continue to rally once again. Finally, let's look at our next time frame here, a much shorter time frame. This is intraday high of yesterday. Intraday low, there's our close. Market finds the bottom. Market continues to rally up, and right now we find ourselves at the short-term level, the short-term price level of this market. This is our north-south line here. As long as the market remains above this trend line here, we're expecting the market to continue higher. Any break below there, the first test, of course, is going to be our pre-market high from yesterday, and after that, the potential is endless. The potential is endless for continuation, but if you're looking to the upside and you're just wondering how deep it can retrace, the market can retrace all the way down to these price levels here, right at about 43.44, which would be a 61% retraces from this swing low in the pre-market to the current swing high. that would be a good retracement for more continuation to the upside. Any break below there, obviously we're not looking at retracement. It would be definitely a shift in momentum and direction, potentially an oscillation to this particular price level down here at about 42.97, right about that area there. So those are the key levels here to keep your eyes on. Stay long as long as you stay along here, and of course breaks anywhere below here, you're looking for shorts potentially to this level here. Take care, have a great session. Let me know if you have any questions.